Hello, everyone, and welcome to our April, I can't believe it's already April, monthly real estate, mortgage, and market update. Oh my goodness, Nicole, so much to talk about. It is tax time. Everyone is scared. Everyone's filing their taxes, getting their taxes in, asking for extensions, XYZ. Something I do want to talk to you about is I heard this term lately in the mortgage world called LLPA. And I've been in the business for 10 years. I don't know much about it. I'm sure my buyers and sellers don't know much about it. I'd love to pick your brain about what LLPA is and how it affects mortgage rates and buyers' loans. So take it away.
So an LLPA is something on the back end. It's a loan level price adjustment. And those LLPAs are how we get to a pricing grid. So people will ask all the time, what's your rate? The answer is it depends. It depends on your credit score. It depends on how much money you're putting down. It depends on what kind of product you're buying. A condo is priced differently than a single family home. And now it even depends on what your debt to income ratio is. That's a new one that was just introduced. So the LLPAs, the loan level price adjustments, creates a grid. And on the grid, it would have, based on the amount down and based on your credit score, here's the adjustments to the interest rate. So say a par rate with no adjustments is 6%, but your credit score is a 620 instead of an 800. So you have an adjustment that's maybe 1.5, 1.5. Now that doesn't mean that your interest rate goes from 6 to 7.5. It means the pricing that makes up that rate shifts. So maybe that rate, now if I have a 620 credit score, I have to pay 0.5% or 0.75 to get it. It's getting a little confusing quickly, but it just goes into the pricing behind the rates. And then you can determine based on the rates that day, because the LLPAs stay the same. So all the pricing adjustments stay the same based on the market rates that day. Then I put on this filter of what the adjustments are. Then I can turn that market rate into your rate based on your specific LLPAs.
And that's exactly why it's so important for buyers to reach out to you and your team to find out exactly what the rate is, because it's their rate. It's not a rate. It's not, and rates change all the time, but they need to find out what exactly their rate is, just like you said, based on all those factors, because a person with a 750 credit score versus someone with a 550 credit score, like if you have everything you just said, it makes so much sense why every loan package is different and everything has to be tailored to that specific borrower. Because everyone's financial portfolio is different. So that's why it's so critical. And I tell my buyers all the time, we need you to talk to a professional mortgage advisor like Nicole Rueth and her team, because we need to find out the nuts and bolts of what you can afford. So we know, are we looking at homes that are worth 500,000? Are we looking at homes that are 850 or million, whatever the case may be, because it really just depends on your financial package. So with it being tax time, what are some tips and tricks or anything else you want to tell the buyers out there that, you know, they're working on their taxes, they're filing their taxes at this time? What do buyers need to know as they head into this season?
So tax season gives self-employed borrowers choices. So do I want to go after the income that I had in 2022? So what I tell a lot of my self-employed borrowers is have your CPA do a draft of your tax returns. We have choices on whether or not you file or you pay the amount due, because you have to do that either way, and then you file an extension. So a lot of times we just need your last 2 years of recorded tax returns. If you file an extension, you haven't recorded it yet. So we could actually use your 2020 and 2021 and exclude 2022 until which time you have to record it, which if you extend it, you can go into October. So talking and having that good relationship with your lender will help you to determine what is your best course of action. I am not a CPA. I don't pretend to be a CPA. I cannot advise you on your tax returns, but I can advise you based on all of the deductions that you're taking. Here's what you qualify for. Now, if you want to go back to your CPA and negotiate how your taxes are done or some of those deductions, that's between you and your CPA. But it gives you an insight before you file your tax returns as to what that number is going to land you for a home purchase.
Absolutely. Now switching over to our market, we do talk about inventory every month that we meet. And inventory thankfully is going up as I'm looking at it right now. For under $1 million in the city of Denver proper, there are over 400 units available, which is the highest it's been in a while. Now, is that a balanced market? Absolutely not. But we're getting there. We're every little house that goes in the market under $1 million, or anytime, obviously, but we're getting closer, which is good, but it's still not offsetting all that demand out there. So we're just hoping more sellers want to put their homes on the market. But we do understand how a lot of sellers bought their homes maybe 2-3 years ago when interest rates were a lot lower. So it's definitely harder for them to give up that solid interest rate. But anyway, if anyone has any questions about our current real estate market here in Denver or anywhere else, please give me a call. My phone number and information is right below this video. And to talk more about LLPAs, or maybe get your financial portfolio all set, ready to go, to have Miss Nicole and her team get you your personal rate, all her information will be below as well. Nicole, I look forward to seeing you next week. Next month is May, and we will talk more about heading into the summer real estate market. We'll see you then.
Fantastic. Bye-bye.